This is the Retirement Solution Podcast with financial advisor John Hicks, founder of J. Hagan Capital.
I kind of learned a hard lesson as an adult about how, wishing Happy Memorial Day and start of summer and all those things. That's not really what we're doing here. I always like to take the time to remind folks
that freedom isn't necessarily free.
It's not.
So as we're embarking on this Memorial Day holiday, and we got to remember, how we got here. Mm-hmm. How did we get these freedoms? And it's because of all those brave sacrifices that so many people made.
Yep.
And unfortunately, they didn't come back to us.
Yep.
And so we have to always remember and raise our glass to them and acknowledge not only them, but their families, who they unfortunately had to leave, that we absolutely celebrate your sacrifice to the country. And let's celebrate that this weekend.
That's right. Raising our glasses. If you are out enjoying your time with your family and friends, we hope that you do so. But just remember what it's all about and to honor those who have served and sacrificed for our freedoms. So with that in mind, a nod to all of those men and women who are serving our freedom, turning back towards the work that you do, John, and helping folks find financial freedom, right? I mean, that's
absolutely.
At the end of the day, that's what you're working to do.
That's exactly it. So many of us, we put in that time, we put in that toil at their jobs.
Yeah.
And at one point in time, they're like, man, the light at the end of this tunnel, I'd like it to be a little bit brighter.
Yep.
And that's fine. That just means we just need to create a plan for that.
Yep.
So that they can enjoy those later years.
Yep. Thinking about, especially, listen, the last 3 years, there's been so many questions. I think for a lot of people, the big question is like, just tell me where to put my money, right? Like, just tell me,
sure.
Tell me what to do. What's right? Because what's left is right. What's right is left, up and down. It's all backwards now from what it was.
I hear that the sock drawer is a really good spot for some people.
All right.
I mean, dependingly.
No, that's exactly what I wanted to talk about because back in 2019, billionaire Ray Dalio, he's publicly stated, quote, cash is trash, John. However, fast forward to the now, and he has flip-flopped on those feelings, recently telling CNBC that, quote, cash is a better investment than stocks and bonds. Here's what he said.
You've got a cash rate that's relatively high. Cash used to be trashy.
Cash is trash, is what you used to say.
Yes, negative 1.5%, 2% real rates. Terrible. Now cash is relatively attractive.
Again, everything is backwards as it was even just a few years ago, at least according to Mr. Dalio.
Yeah, so I mean, you got to understand who Ray Dalio is. He's not only one of the largest, but one of the most successful hedge fund managers of our time period. And, he did say this, and there's a reason for it, Heather. A few years ago, if you had your money in cash, you were getting less than 1%. You may have gotten no money at all from the bank or your money market accounts. I mean, I remember having a lady who came in and she was sitting on about $700,000 of money market. That money market was paying 0.01%, which is horrible. And so you flash forward, and so Dalio said, hey, cash is a terrible investment. Cash is trash right now. And now you look at it, and of course, right now, I know that for some people that, looking for short-term investments, we've got CDs that are paying over 5% right now, some of them even 5.25% for 1 or 2 months. So, I mean, that's not bad, but I'm going to have to take one little disagreement with Mr. Dalio.
Okay.
And the fact that, yes, I think that because interest rates have come up a good bit, it does make this look more attractive, but we're still losing money. And we can't forget that. So if you're looking at the current Fed rates of what they're trying to do, and if you look at where inflation currently is, even a 5% CD is essentially losing you money. Now, it's doing it very safely. You're safe. You're FDIC insured if you're under $250,000, but you're still losing money to inflation. And so when you think about that, is it a better alternative than it was last year or the year before? Absolutely. But are there other things that we can consider? Absolutely. And Heather, I want to talk about those today.
Okay.
Because if someone says, John, I'm worried about the markets. I'm worried about the economy. I'm worried about financial earnings for corporations. I'm worried about all these things. Hey, man, I'm with you. I understand that. There's a lot of weird headlines right now.
Right.
But instead of putting our money in something that is basically guaranteed to lose us money to inflation, here's some alternatives we can actually kind of consider.
Okay.
Number one, there's a concept called insured indexing, where you can literally get your money insured. You can either get it FDIC insured, like a bank CD, or you can get it insured by an insurance company. And instead of them giving you a 2 or 3% interest rate, or even 4%, instead they allow you to participate on the upside of a stock index. So, for instance, if the market goes up 9, 10, 11, 12%, you can get 9, 10, or 11%, which isn't so bad. So that's a concept called insured indexing. Other things that people can consider, which are very safe, considering other options, would be principal protected notes. And these are often underwritten by banks or insurance companies, and they will fully protect your principal. But often, Heather, right now they're paying anywhere between 6 and 9% cash on cash. Some of them even pay monthly.
Okay.
So that's not bad. That's not bad. You can consider market-linked CDs, which again, they're FDIC insured. But if the market goes up, like so far it has this year, you can get a pretty attractive return, 6 or 7 or 8%. Now notice every one of these returns I'm talking about can actually be better than the inflation rate. That's the whole point.
Yeah.
It's not about being in cash, like Ray Dalio suggested is okay. I still don't want us to lose money. So these are better options. 2 or 3 more, just because a lot of people have never been exposed to these things. You can use trust accounts that actually will provide you 7 to 10% a year of actual spendable returns. Those are not bad at all. And some of them are structured similar to a hedge fund, which is exactly what Ray Dalio runs.
Right.
And he's been very successful. So you can use trust companies to protect that money. You can also use covered call strategies. I was talking with a lady the other day, and she just really wanted dividend income.
Okay.
So we explored, a lot of the other strategies we've just talked about, they weren't quite her fit.
Yeah.
But we found a covered call strategy, which has a good amount of downside protection, but it's going to pay her almost 11% in dividend income annually. Now, she knows that there's a little bit of ups and downs with it, but she was totally fine with that because that is a great income stream. So guys, the thing to understand is there's not one size fits all when it comes to investment strategies. But when we're thinking about what we really want to accomplish, if we just are afraid of market risk, well, a lot of these strategies I just mentioned, they can be safer, and some of them can be completely safe or even insured against loss, which makes them a little more attractive. And the secondary factor is every one of these things I talked about is still potentially going to beat inflation. And that's the bigger picture, right? It's one thing to have our money in the bank and know that hopefully it'll never go down, assuming that bank stays in business, right? There's a few of these guys that have been having some trouble. But there's one thing in keeping it safe and losing money to inflation. It's completely another to have the money being safer and still getting a good rate of return. So if you're looking at those things in your portfolio, get a second opinion. It's one of the easiest things you can do to find out, would these strategies be a benefit to you, and how can you utilize them during this period of weirdness, if you will, to put yourself in a better position.
Well, and the whole idea of getting a second opinion, that's kind of my bigger picture follow-up question to all these points you just made. I mean, things like, knowing about trust accounts, knowing about, what'd you call it, covered call strategies.
Covered call strategies,
These are things that intelligent people have never heard of, John. And this is what it all comes down to, the idea of why perhaps right now more than ever it's so important to be seeking some financial advice from a professional like yourself, because there is so much that has changed. It will change again, probably sooner than later. And how the heck are we supposed to know all this stuff? Yeah,
I mean, I would tell you that, I've been to school for a really long time. I've got 3 master's degrees. And the crazy thing is I still learn something in my own industry pretty much every single year. There's no question. So the covered call strategies, they weren't very well used in the past because they were very expensive.
Got it.
But because of technological changes and the way that options are priced, they're actually not only very affordable, they're pretty attractive, where we can actually have market-based investments. We can get in or out of the market any day we want, but we can get much better dividend streams. And here's the big thing about that, Heather. Sometimes they're very tax favored. So we actually get even better tax treatment when we utilize some of these strategies. So it's not rocket science, but it really is one of those things where that's why I've always said you want to seek out a skilled fiduciary.
Right.
Now, the first word I said there was skilled. You want to make sure that not only are they fiduciary, but they understand what the heck they're talking about. You don't have to, go for the guy that's got 58 degrees. That's not the point. You want to make sure that they make sense for what you want to accomplish. And if they do, that might be a good second opinion to get.
Thanks for listening to the Retirement Solution Podcast with John Hicks. Begin the conversation about your savings plan with John and the team at J. Hagan Capital by visiting retirementsolutionradio.com. Be sure to listen to John's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Inc. is not licensed in all 50 states. To find out if J. Hagan Capital Inc. is licensed in your state, please call 502-690-5635. J. Hagan Capital Inc. is not affiliated with nor endorsed by the Social Security Administration or any other government agency. It does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Jonathan Hicks, insurance license number 548962.